Hey guys, this is going to be a kind of on-the-fly video I wanted to record. It's not something that I think is like sauce that I kind of keep to myself, but a lot of people have asked really, how I chart, and I'm going to kind of go through that here, time frames that I use, how I end up kind of charting my the setups that I'm going to be trading for the week. But there was a question that got brought up in the Discord about Anna Coling's book, which is very, very interesting, and I can see how a lot of people get confused, and I wanted to go over the context of it, and I do that in this video. And really what the question was if the market trades to a low and we see high volume, it's usually a sign or it's indicative of buying from big money. But once we get to the highs, right, we see high volume, it's usually indicative of sellers, right? And somebody said, well, if, why would that be sell pressure if it's at the highs? And I think, a lot of people think this way, where they think, and it's hard to grasp that the highs are not used for breakouts, right? A lot of people just aren't breakout traders. There's very, very, defined areas for breakouts and where they work. And that's where I wanted to tie into internal range versus external range. I use this all the time. I think this is crucial for how you chart and just having, the understanding of where you're at on charts and where things are likely to occur. So sit back, relax. I'll try to break it down as quickly as I can. This is take two for me, so I'm going to cut this up into bits and pieces because I do talk a lot. And I'm not going to lie, I run out of breath. So bear with me. I'll try to make this as smooth as possible. So let's jump into the next slide. From the bare bones basics, what is internal and external liquidity, right? So external liquidity is essentially the high and low that defines the current dealing range. So it's primarily, at least how I do it, is primarily off my higher time frames. But you guys should know that the market is cyclical, so if you do have like a monthly high and low, you should know that on the daily it's going to give you a high and a low, right? If you go to a 15-minute, you're going to have a high and a low. So you're always going to be having external highs and lows, and then within that you're going to have smaller, right, movement, which is your internal. It's really dependent on how you want to trade that and what your personality is. But for me, I do understand that the market wants to trade to, monthly, weekly, or just the major swing high, swing lows. So I like to mark out my external liquidity on the higher time frames, which would be, my monthly, weekly, daily, and then I move down into the internal, right, which would be daily, hourly, and then I kind of trade it off the 515, okay? But moving into the internal liquidity, same exact things I explained. It's the highs and lows within the dealing range, and it's primarily my lower time frames, okay? Why is this important, right? We should all know the market is very, very efficient. It's a well-oiled machine. Things could be happening in the economy, and it still trades from level to level. Really, I talk about it a lot. This is just one big auction. That's all this is. Things move to fill orders. It's a lot. There's a lot of money that's moving in the market. These guys have to facilitate price. So the market, as I guess, as a result of that, it wants to trade from high to low or low to high while balancing the internal ranges before moving to the external, right? So it can't just move from one external to the other. It has to build bids. It has to slowly refill imbalances that have occurred, whether those are fair value gaps, whether those are, gaps that have occurred overnight from news. The market does want to balance itself out on its way to those highs or lows. Seems simple enough, and it does this through accumulation. We talk about that all the time. Manipulation, which is essentially the sweeps of the highs or the lows. This is why I don't trade external high breakouts or external low breakouts. I wait to see if there's some kind of fake break, and then obviously a retrade back into that range, and then obviously it trades to the opposing external high or low, right? That's the manipulation factor, and then you'll see distribution occur. Okay. Remember, accumulation is at the lows, distribution at the highs. Manipulation is just a high volume sweep of an external range. Okay. Well, I'll show you guys little screenshots of it and things like that. But that's essentially all the market does. We can obviously include the accumulation in a sense with consolidation or distribution with consolidation. That's usually what that is. It's just a phase of gathering inventory or selling inventory before a move. So you could put consolidation in here as well. But the point of this, right, is just understanding the structure and the bias of the market, because this can give us a really, really good edge in defining what the external liquidity is, right, and how it's attempting to draw to that, and then using the internal structure as kind of like your vehicle. How can you trade towards that, looking for your perfect entries or your ideal entries, and then understanding that once again it wants to trade to the low or the high, and just being able to understand, where it's trying to go, and just riding that path up to that spot. So that is essentially what internal and external liquidity is, or kind of the ranges from them. Let's jump into the time frames that I use, and basically how I execute as well. Time frames, remember I said higher time frames are mainly what I use for the external. So it's very simple. This won't be too long of a slide, but monthly to the weekly, this is what I do almost every single week, every single month. And then weekly to the daily, that's pretty much how I do it. This is a fantastic time too, because we are starting a new month. So if you guys aren't charting your monthlies, you guys have to be doing that, and then just really taking it from the top down. Just going from higher time frames down to the lower, and then once you actually hit your lower, for me that's daily into the 4 hour, and then 4 hour into the 1 hour. Then I'll be able to have essentially what I think the external is and the internal, and then I think about how that roadmap's going to look and how it's going to draw to wherever the structure is pointing me to. If it's in sell side structure, I'm looking for lower highs, and I'm looking for the internal ranges of that, and then understanding there could be a sweep over an external spot, things like that. And really how I execute them is on the 15 minute and the 5. So when I chart it, I'll go from the 1 hour to the 15, and then 15 to the 5, and that's really how I like to execute my trades. Anytime I go under a 5 minute, go to like a 2 or a 1, it gets a little bit too frothy. It gets hard to really control your emotions, especially if you're moving a lot of money. You'll see things that that typically end up being nothing. So I found 5 and 15 are kind of my bread and butter. But I'll show you guys here in the next slide essentially how I end up charting and how I make my way all the way to the execution screen, and really just getting your mind right of how you want to be looking at charts. Remember, everybody does it on their own, or I guess in their own way. If you found success your way, by all means, you could ignore this. But I think it is important to just understand the swing highs, swing lows, and understanding what's going to happen at those, those external ranges, right? Typically, I'll avoid those for breakouts because I understand that, whoever bought the low is going to want to sell the high, right? And if I didn't get in on the internal ranges, it's not for me, okay? So let's jump into the next one. This is really all an external range is, and I'll show you guys what an internal range is as well, but really it's just the high here, right, and the low. You can ignore this line here, I just kind of drew it for visual purposes, but this is how it will look, from the low here to the high. That's really all an external range is. Now, if we move to an internal range, you guys will notice it's a little bit different, right? This should look a little more familiar. You still have the external low, the external high up here, and then you get a breakdown, right? Then you get your lower high. This is essentially, right, this is all this is, as long as it's within the high and the low, this is all internal, okay? So now what you'll end up having is a lower high, a breakdown, you get your kind of break of structure here, you get a retest of it, and then you have your next internal range. And really all it's trying to do is trade to the low, right? They probably sold up here after the accumulation here, and really we're just looking to jump in on the internal range and get down to the external low. And vice versa here, I just kind of screwed up. I didn't put low here. I just kind of mixed up the spots. I was doing this really late last night, so bear with me. Same concept though, right? It kind of sells down, buyers step in, pushes out, higher low, but this is still the internal range within the external high and the external low, okay? And I mentioned earlier there is structure within structure. So I want to talk about that. Why do I only trade and look for the reversal off of the externals, right? And I did mention it's important to understand this from a risk reward perspective, but these are also the most lucrative trades, right? Because a lot of uninformed buyers, uninformed sellers, just kind of retail in general, is always so caught up in the breakout or the breakdown, right? And that's not really how big money thinks. They use these as opportunities to sell their positions into willing buyers or willing sellers. And that's why I love really just being able to understand where the big money players are trying to push the price to, and really understanding. I like to look at sentiment all the time too, because the uninformed traders of the market view these areas as, like I said, breakout opportunities, breakdown opportunities, and they misread the volume in these areas very, very hard. You know, a lot of people still don't really understand volume. They don't understand candlestick patterns. But remember, if you can just understand where you're at in context of the chart, you should get some like spidey senses. You know what I mean? If you can see high volume occurring at you know, let's say you start to chart today and you see an external high break tomorrow on Tesla or SPY, and there's no real, you know, strong candle that actually, you know, creates a really nice higher high. The candle end up kind of, you know, fading really quickly. You should get those spidey senses, guys, if something weird is going on. You know, kind of just understanding where you're at on the chart. Why isn't it making a new high? You know, why is it a weak attempt on the push, but it's high volume, right? Maybe it's not a strong close. Things like this, and you'll start to really understand, like, oh shit, I probably shouldn't be trading these areas, right? I missed my opportunity a couple days ago, maybe an hour ago, and just let the market do its thing. It's going to recorrect, it's going to rebalance, and that's what it does. So, you know, once, just kind of going back on track, once the sweeps of these external ranges occur, there's plenty of opportunities to enter. I always talk about that. It's not going to just be where it catches the bottom or it sweeps, you know, an external range and it just trades to the opposite side. It is going to develop a trend. It is going to develop those internal spots. Remember the higher lows, lower highs, and it's going to trade back through the inefficiencies that were left behind. Okay. We should know these inefficiencies occur all the time, whether it's some random news piece that comes out, you know, a bond auction, PMI, you know, CPI, anything like that, where something just dramatically drops price very quickly. It skips orders, right? And then what ends up happening, it usually trades back to those orders to collect them, because this is, once again, an auction. They want to facilitate price to willing buyers or orders that were just sitting there. So we want to have that opportunity to really collect these once the sweep has happened, and we're looking to jump in on the internal range. Okay, goal is always to trade with the trend, and we should kind of know, right, with one external sweep, it's going to trade to the opposite external. Okay, hopefully this is making sense. I don't think it's too confusing, but really, remember, I always talk about it, market just trades level to level. If there's anything you should fall on, just let the market trade level to level, understand the context of where you're at. And then, yeah, last thing here, I just want to show you guys Tesla. Tesla has a fantastic example. We'll start with the monthly time frame. I'll show you guys a very easy to spot external low, and it does sweep it. And then what it does is it starts to restructure, and you guys can see it in real time here too. I think it's going to happen, but it's trying to trade back to the external high. I think it's back at like $300 or something like there. And then what we'll do, and I'll show you guys exactly how I chart it, is we're going to go from monthly to weekly to daily, right? And we'll eventually start to, you know, complete our external and then mark out our internal ranges. All right, and this is what we know as like kind of our microstructure and the pathway, right, quote unquote pathway of how it's going to be trading towards that high. Let's jump into it. Okay, pretty simple here, right? Higher time frame externals. We're going to start on the monthly, and this was the monthly low. I don't remember the date, but if you guys can see, right, this was a clear. If I could pull this over to the left, clear resistance here. There was also a previous support, so this is a simple SR flip. But we did find a low here, right? We found a higher low in this range. It broke out, and then obviously it pulled back and retested this old support. I mean, I guess it's current support now, but this was your new range, right? We always talk about this where you go from range to range, right? Once you claim an external high, it'll kind of consolidate for a little bit and then eventually retest it. And then from there you have a new range. So this was an old range with the high. It breaks out, creates your external high, pushes down, retests it, and what do we get? We get a sweep here, right, of an external low. Now that we're sweeping the external low of a previous range, you know, a new support here, obviously, what is it going to do? You guys can answer this, I hope. It's probably going to trade back to the external high here, whether it sells above or it breaks out, right, and then creates a new base. It's remained to be seen, but we could get a new range up here. But we do know, I wouldn't say for a fact, but the goal of this is for this to trade from the low to the high, okay? And there's going to be essentially a blueprint that it's going to be creating. And if we jump into the next frame here, this is now the weekly. So we had the monthly, now we're in the weekly. Everything's the same. We have the monthly external high, the monthly external low, and now on the weekly, you guys can see here, we had a breakdown, kind of a higher low, popped out, lower high. What did we end up getting? This is where that sweep occurred, and then we ended up getting some nice consolidation, and then it broke out. So now we have our weekly external low. What is this up here, right? weekly external high. This was the lower high. So this is now, right, kind of the path that you guys should be able to see. It's trading from the sweep at the monthly low, broke up, kind of traded towards this weekly low, consolidated, broke out. Now it's going to likely trade to this weekly high. We'll probably sell off and then break out and still continue its path up to the week or the monthly external high. I apologize. Let's jump into the next one, which will be the daily. So this should look really familiar to you guys. And you guys probably, I know a lot of you guys copy how I chart, which is awesome, but you guys really never knew how I got to these. I know some of you guys kind of caught on, but right, this is essentially what you guys see every single night in the daily scan. But now we can start to piece together the puzzle, right, from our external or our higher time frame, and we're making our way down, right? So we have still our monthly external high. We know these are eventual targets. Technically, these would be internal, right, the weekly, but I just did it for visual purposes, for you guys to understand like what is higher time frame, right? So you guys can see how it's piecing together now, right? So we have the monthly external, the weekly external, right? Weekly low, monthly low. And now what we can do is look at the daily. This looks fantastic, but now we can piece together what is actually happening here and how these internal ranges are going to form to get to these externals, right? So now we know there's a gap here that was support. I guess it wasn't support, but this is a good progression spot. So we're going to be looking for it to potentially hold the top of the gap to keep the progress. If it sells off underneath that, right, it looks like it's going to push down to the gap support once again, right? We have a ton of daily lows here. But if you guys kind of know how I think, there's this imbalance that's still never filled at 225. That thing's going to bother me forever. But now, for the most part, we at least understand, right, where this is kind of formulating at. It's right in the mid of the monthly and the external, the monthly external low and the monthly external high. It's just got to find its way somehow to get up to this first target, right? I think this is like 280, 300. No, I think this is 280. But it's got to get some kind of invigoration, and it's going to happen by either triggering out this gap here, or it's maybe the imbalance here, or right, let's jump into the next piece of this puzzle, right? Let's go into the 1 hour. This looks a little bit more familiar, right? And I wanted to mark out something here, and why I have this is because there are micro externals, right? And there are micro internals, okay? So remember, this wasn't here before. We can understand though that as we go to the 1 hour, this is now a high that the market probably wants to trade to, right? And as we break down lower time frames, we also have to understand it is rebalancing. Remember, the market is very, very efficient. So what are we looking at here? Right, we do understand that this gap is way down here, maybe 225-ish, but that's a lot of orders it has to go through. Remember, this is a lot of support down here. So what is it likely going to do, right? It's going to try to generate some kind of cell structure, right? So we have a micro market structure shift here. This would be kind of like our break of structure, right? But what will it do? It looks like it could break down, test that gap support, retest this and sell off, but then what would end up happening, right? This is an imbalance here that's sitting here, okay? This was, I don't know the exact date on this, but there is a small imbalance here on the hourly, and this has potential for that internal range sweep, right? And then continuing back up above to get to the micro external high, all right? So now if we jump into the M15, M5, right, our 15-minute, 5-minute, then we can start to see how this would actually look. I did give kind of like a prediction of what I think Tesla will end up doing, but you guys can see, right, if we go to the 15 and 5, look at all these inefficiencies that were left behind on the sell-off that occurred up here, okay? And you notice this ended up sweeping too, this micro external. It swept this high right around here, and then it sold off very quickly, but you guys notice the imbalances. Fair value gap here. Fair value gap here, which never filled. And now, right, we have this internal range low. Now, what I think would happen is it would sell off, retest, push back under one more time, get a little bit under that gap level, and then fill the imbalance, right? And what do you guys think would happen? I mean, this would probably, on a 515, it would look something like this. But I assume if you look at like an hourly, a 4 hour, a daily, this would end up, this whole little range, but from here to this low would probably be just one big wick, right? And this is how you end up seeing those not the gap traps, I'm sorry, like those liquidity trap candles formulate, okay? So probably come down, break here, push up, retest, break back up, come down, right? We now have a clean This would be an LPSY if you're talking about like Wyckoff, but this would be a clean break retest of an old kind of like swing point, right? This is our internal range low, and then, right, start to trade back through to these inefficiencies, right? And this is what I was talking about, how you can use these kind of like the blueprint of what the internal range inefficiencies are and ride those like a vehicle. And we kind of know that it's going to trade towards this external range high, right? And then from there, what's it going to do? Because this is technically the external range high, it'll probably trade to the weekly external high and then the monthly, right? And it's going to take its time. It's going to balance itself out properly, proportionally. It's going to take some time, but this is essentially how the market trades. Okay. In basic summarization, I already went over this on the first slide, but this all, like I said, started from Anna Colling's book and a question that we had on volume price analysis. And remember, I said this a ton, but I know it can be confusing, especially as a newer trader or just a student of the market. But it's so important to just understand context. And we obviously want to be observing something first to understand the context. That's why I hate flow trades. I hate anything like that because you have no idea what's actually happening, right? But the things that you should, kind of understand before you go into a trade is structure, volume, candle, right, and the external and internal range and the context of where you're at on that chart in relation to those ranges, right? Those are the footprints that you always want to keep in mind, the four listed above. They're the footprints that they can't hide. And we can piece together, not a full story, but if we can get 60%, I'm pretty sure we can all, apply what the other 40% might be. And that just gives us an edge, you know what I mean? Understanding 60% of the story or being able to understand 70%, I'll take those odds any day. And really, the story Anna Colling was trying to convey was revolved around the external highs or the lows being swept, right? This high volume is usually an indication that the chart has traded from one swing point to another, and that's the target, right? And it's likely the big players are now exiting. So just the ability to understand whether you're in an internal range or at an external is so, so crucial. I think it's one of the best things you can absolutely do as a trader. And just being able to, just chart, understand, what is an external, what's an internal, and then trade however your personality is. You don't always have to catch the tops and the bottoms with this. If you understand an external low has been swept, on a daily chart or a weekly, you can really just kind of figure out, and you don't have to be super aggressive, guys. You don't have to get it all the way back to the high, but you can start to understand, like on the smaller time frames, like where this is going to trade towards, look for structure, and it really refines your trading because now you're not looking to short or buy off levels. You're simply looking to just buy, but wait and be patient for pullbacks, and that gives you an edge in itself. So, like I said, within an internal, you can trade these things that you're familiar with, the breakout retest, the break of structures, the LPSYs, and really just join the trend, and then it's your job to just look for the imbalances that were left behind. And it's so much easier to trade those. And whenever you see high volume, you can be confident that it's the high volume that's continuing to favor the trend, that, and you don't have to worry about them being fake outs. Especially if the fake out already occurred, right? If the high has been swept and we're looking for lower highs to trade this back down to the low, right? You're not going to be super concerned of being, it being a fake break or whatever it may be and not being a lower high, especially if one side had been swept at an external. So that's my presentation, guys. I tried to keep it as as quick as I could. I tried to go through how I would chart things. I tried to go through my explanations of, how I view charts. It all is, once again, just a big auction. If you're going to take anything from this, structure is number one. Obviously tie that into the external and internal range. I can't do like candles, so this will be a long video, but just the basics, right? Candles have never really changed, but then understanding what's harmonic and what's divergent, that's another big thing. But remember, that has a relationship to the range that we're in, the external and the internal. Being able to understand that, maybe if you're in an internal range and it breaks a high and it pulls back on low volume, right? Understand that we're still in an internal range. Maybe 2 weeks ago we swept the external low. This is probably going to trade towards that high, right? And then you could be comfortable taking pullbacks and not shaky and not being afraid. But maybe the next time you see an external high and it's breaking out over the top, you're like, oh crap, this is like a huge weekly pivot. This is a swing high here. Maybe I'll just watch it, right? And then you can save and be, patient. And if it breaks out, you don't, you can just wipe your hands off. You're like, okay, cool. It wasn't meant for me. I'll find a better entry. Maybe give it a consolidation for another day or two if it does pull back. Things like that, guys. And it really just gives you a sense of patience, a sense of peace with how your trading style is. And it really makes, when you sit down at night, meaningful. You're not just charting so many things. You're looking for, how the structure looks on the chart before you even get down to your execution time frame, guys. You can start to look at the daily, weekly, monthly, develop your bias for what you think is going to happen, where it's drawing to. And if you can't formulate anything, don't trade it. You know what I mean? Wait. You guys can give charts a couple weeks. You don't have to trade every day. But I'm going on a tangent now, as I typically do. But that's pretty much it, guys. I hope you guys enjoy. If you guys need to replay this, I definitely recommend just kind of going through. As always, I'd leave it up to you guys to go find your own examples of this. It's on every single chart, guys. It just really kind of comes down to the work that you're willing to put in. But yeah, one of my favorite things is just kind of being able to understand the context of the chart. So I leave you with that. Everybody have a great, January 1st, new year. We have a lot of, new people joining. We have, obviously high expectations for the group itself. But yeah, I mean, this is going to be a good year. I'm very, very excited. I think I've kind of refined my edge a little bit more, as you always should. And I hope you guys have also been able to do the same. So I'm very excited. Let's go ahead and get a good 2024.